Hi everyone, welcome to 2017. So the stock markets was doing really good in the first week, even is globally. So we've been wondering, is the January effect really work? If that work, it will be really great. Why? Because this effect states that by only looking at the first month of the performance, then for the rest of the 11 months, you can just sit back and enjoy the ride. You can do whatever you want, and the investment will eventually yield a positive return if January is doing good. But there are two things you didn't know about January effect. So in this clip, I'm going to explain what two things that you didn't know, and also towards the end, I'll kind of update the stock market, what you kind of want to expect in the first month, even the first quarter in the stock markets in general. So with that being said, let's go. So before telling you the two secrets you didn't know about the January effect, first of all, you need to know what is the January effect. This effect is developed or created by an iBanker from long time ago, almost a century ago in 1942. So the original January effect is like that. If an index in any given December uses a negative return, then you should buy, because in January it will use a positive return. That's the original January effect. So let's do some statistics and math behind that so that we know if that really works. So for the past 10 years, we'll use the benchmark, we'll use S&P 500. For now, we'll not really use the Dow Jones as a benchmark. I will explain why later on in other clips. But if we use the S&P 500 in the past 5 years, the accuracy is only 55%. 55%, what does that mean? That means if you bet on a roulette, it's red or black, it's 50-50. If you bet on dice, if it's small or big, 50-50. So that means it doesn't really work. So unfortunately, for example, for the let's say the December of 2015, S&P 500 was dropped by 7 points. So according to the January effect, you may as well just purchase and start investing for January. But unfortunately, the next month, January of 2016, it dropped even a lot more. It's dropped by 60 points. So if we solely trust on the media and stuff like that about the January effect and just dig right into investing your own money, then you'll probably lose more than winning. I'm not trying out that that's the first thing you might not know about January effect. It really didn't work for the original January effect. But I'm not trying to call out anyone or take away any credits for any great people from the past. But I'm saying that maybe the world changes, and maybe some theories from other medias and some columnists, they really didn't do their math, and they just tell us something, and we just trusted it like 100%. That is what this is the same mistakes I made from my past, from my 20 years of investment experience. So right now, I'm currently in Asia. I'm investing globally, like stocks globally. I'm investing in foreign exchange. I'm also commodities. So I do a lot of math and statistics. By the time I lost a lot of money. So I'm hoping that this channel will give you some insights, and I'll do some math and statistics for you guys. Hopefully I can be the bridge in the global investing world. So the second thing you didn't know is after some time there's kind of a second version of the January effect which came out. So what is this effect? How is it different from the original January effect? Is that for the index and any given January that yields a positive return, you should just sit tight and enjoy the ride for the next 11 months. Why? Because that same year, and in the end, will also yield a positive return. So that is a really big claim that this thing comes out. So I did some research and statistics. I used 88 years. You know the accuracy? The accuracy of doing that is 72%. Now, in investment world, you have to know that there's never a guarantee, never 100% stuff going on. So you always bet on higher chance and try to avoid lower chance things, okay? And you will cut loss tightly and you will cut gain like more reluctantly, okay? That's how you win. So for this, over 70% is really something that you have to take reference of. So surprisingly, the second version of January effect really worked in the US market. So it's 72%. And I've done some research in the Hong Kong Hang Seng Index, in Malaysia, Singapore, and also in China, even in the Chinese, the Shangzhen Index, okay? They all use an accuracy more than 60%. So it's just not in the US, it's almost a global effect. So right now, for 2016, S&P 500 in January yields a positive return, and we all know the result. In 2016, the index almost grew by 8 to 9%. It's really crazy. Given that you also know how to stock pick, you outperform the index. That's also what you have to look for. You have to outbid the index. If not, you can just buy ETF, right? So S&P 500 had that performance. So starting off the first week of the 2017, S&P 500 was doing great. It is going up by almost 18 to 20 points. So right now, almost there are a few weeks to go. So we'll see how it goes in the first month. But now, what kind of event or people globally can affect this effect, right? Because after all, this is just the statistics. After all, the stock markets have more or less have to be aligned with the global situations. So first thing first, in January 20th is the official first day of Donald Trump being the United States president. So you have to be careful that we don't need to focus on that day. We have to focus on the days before, because stock markets are always about speculation, always about getting early, right? So we have to avoid any fluctuations, and we have to really be careful of what the market is thinking about this day before this day happens, if you know what I mean. So I think in January, this is the thing that you have to be careful of. And then the second thing in January is going on is the oil prices. So you know how consensus of the oil supply keep on changing, especially Donald Trump really expressed that they will going to sell the oil supply instead of importing the oil to the US. So they really need the oil price to go down. But for other countries in Middle East and Russia, they really can't hold anymore that the oil price is so low. So that's another big thing going on in January. Of course, if you want more about other things, like in March, there's kind of the preliminary presidential election in France, in Netherlands, and about the Brexit, they really have to go through the 2-year terms by mid-March. Also, in 5th of March, there's a big meeting going on in China that is really big. So that's a big meeting going on among two parties in China. They will talk about the new policy and direction of the economy and how they will do business in 2017. So all this in January and March, there are a lot of things going on. For me, I think my insight, my point of view is like that. People really know that there are a lot of uncertainties going on in the first quarter of 2017. But my view is, as long as we have already, the stock markets have already priced in these uncertainties, so I think when the time passes, when all these uncertainties going passing one by one, I think the stock market will go up more than down. Of course, we have to keep an eye of the stock market, especially charting and technical analysis, if the prices will be too fluctuated. But my view is if not for 2017, it's just for the first quarter of 2017, I think we have to focus on some crude oil, especially some oil companies and stocks. In China, I suggest you can take a look at the PetroChina. And in US, I can suggest you can take a look at the Chevron. That is exactly what we suggested in January 2016 is the Chevron. It gave lots of good returns. So this is one thing. And the other thing you can focus on maybe is the NASDAQ. Because of the paranoia and the speculation of Donald Trump, how he will deal with big companies, big tech companies, right? So some of the big tech companies like Google, Apple, and Amazon, the stock prices drop a lot. So my point of view is, after all, Donald Trump is just a businessman, right? So and before he's becoming a president, he actually go visited Apple and Amazon already. They have handshakes already. So I think that the stock prices of these big tech companies really oversold. As I said, as these uncertainties, especially how Donald Trump being president, pass by and move on, and I believe what used to oversold will bounce back or may give you a good return in the first quarter of 2017. So about the timing, we have to look at technical analysis, that means the charting. So for the oil prices, if you're really interested in crude oil and oil companies, investing in them, so you have to be careful at the $52 range. That is golden ratio, wave theory, and some trend line, all focused on that point, $52. As long as crude oil prices is above $52, you can definitely invest long-term in oil-related assets. So for the NASDAQ, you can be careful, you can look at this way. So as long as the price is not below 5,300, you can always look for 5,500 and above. In terms of valuation, we have done lots of valuation for the NASDAQ index. So the least is 5,800. So we're kind of optimistic of the NASDAQ. So I think the timing-wise is either January or between March, when Donald Trump becomes a president, or after 1 or 2 months he'll be the president, see how it goes. So I think that's really a good timing for you to invest for your portfolio in 2017. So with the two things you didn't know about January effect, and with some kind of insight what's going on globally in January and March, hopefully that gives you some preparation and on what and how to invest for your early 2017. Hope it helps. So if you're new to my channel, hopefully you can smash like button and subscribe my channel. More videos and educational clips will come up, so I can notify you and you know I have new clips going on. So hopefully I will see you next clip. Goodbye.